All right, so Bitcoin's having a little bit of a moment, and I don't generally like to do a lot of TA. If you're on the premium subscription for my newsletter, Crypto is Easy. If you're on the premium plan, what we're going through right now with this little drop, you're well prepared for it. You know what to look for. You know what to expect. You have the plan. We're going to follow the plan, and we're going to let the market do whatever the market does. But I wanted to point something out that might be interesting to you if you like technical analysis. I don't do a lot of technical analysis. The specific technical analysis I'm doing in this video, it's not relevant to the market analysis. It's very short term, but right now I think you probably might be a little worried about what's going on. And I wanted to put something out there just going to give you a little bit of perspective for the short term, for the short run. If the technical analysis plays out now as it has in the past for what I've shown you, you might not have as much to worry about as you think you might. So what are we looking at right now? So right now we're looking at the one-day trading chart. And what do you notice? I'll point out, I'll tell you exactly what to notice. When you look down here, this is the stochastic RSI, and this is the RSI. There are lots of trading indicators that people use. These are two very common ones. Up at the top, we have the 21 daily moving average, and the Williams alligator, which is like a kind of, you can see it right here. It takes a few different trailing averages and it looks at how they play with each other. Sometimes they kind of get mashed up. Other times they're really wide, and it helps identify trends and shifts in trend. So we see the metrics for stochastic RSI and RSI peak before the price does. These things peak right around here. Price peaks, well, there are two significant peaks. One peak up here, another peak here. This peak a little higher to the ultimate final peak before we come back down. And what do you notice in the indicators? A bearish divergence for the stochastic RSI and the RSI. The price keeps going up. The readings keep going down. That is bearish divergence. But this is a one-day chart. It's not a big deal. Definitely bearish signals, but you don't know how long, how low, or anything like that. The timing, the extent, and you know what? Honestly, a lot of times the divergences, they go away. The natural volatility of the market will change the metrics and the indicators and the price in a way where it nullifies any divergence. In this case, bearish divergence is playing out. But let's also look at the 21 simple moving average, which is a very easy line that people use to delineate between, well, it's just a moving average, but it's a really important one on the weekly chart that people use to differentiate between, they might call it bull and bear markets or uptrends, downtrend, buy, sell, whatever. For our purposes, all we want to do, we want to look at how the price interplays with that line. So we go up. We make our highest reading on the indicators back here, go up some more, and then come back down. Break, the price touches that line and then blasts down right through it. Collects itself, bursts up above it, comes back down and kind of wiggles up and down around it before dropping. And lastly, so keep all these things in your mind. And lastly, the Williams alligator. We get this peak here. So 13 bars later, we start to see the lines kind of get mashed up again. Then they expand for a little bit after the second peak. 10 days later, the bands start getting mashed up again. Now let's look at the chart of the entire 2021 year. What do you see? RSI, peak here, peak here. Where's that peak? Right here, before we get to the tops. This was January 2021. Subsequent to that, we had high, another high, another high. Meanwhile, bearish divergence on the RSI, bearish divergence on the stochastic RSI. 21, moving average. Price comes down to the 21, but drops like it's like thud, boom, down. collects itself, pops back up, and then when it comes back down again, after that next highest peak, boom, we wiggle around, we fight with it a little bit, and then roll over. Williams Alligator, about 11 bars after this first peak, we start to see the lines get mashed up. Here, it's about 8 bars after this peak, we see the lines get mashed up. Do you see where we're going with this? So on just these few cherry-picked indicators, what we just went through over the past month and a half is analogous to what we went through in 2021, the entire year of 2021, on these metrics. Now look, yeah, it's different. You look at other things, volume, super trend, certain fib levels, certain ratios and relationships. It is different. But wouldn't it be crazy? The next month and a half will play out like 2022? Would that be crazy? Am I crazy for thinking that? So no, that's not a prediction. It's actually more of a commentary on predictions and the kind of superficial analysis that you get. That's why in my newsletter we look at all these different angles on the market, try to get a broader perspective, not so much in the day-to-day. Never worry about, what happens over the course of a month. But I wanted to point out that might sound really bad, but I want to point out the consequences if what I just talked about does come true. So if we're doing something analogous to 2022, well, look, let's pull the chart. Let's pull 2022. Okay. So obviously we're on a price chart of Bitcoin's price chart. I just pulled basically a mirror image of the price action for 2022, but I'm going to have to shrink it and manipulate it to get it to fit basically a time frame that is 7 times shorter and a price range that is a lot smaller. So let me do that. All right, so I guess beauty is in the eye of the beholder. So this would be the closest approximation I could get, where just like back in the day, right, you came down, and then when the price bounced back up, it came close to the 21. It kind of meandered around that 21 and then fell like crazy. So if we do something like that, we'd end up in the mid 19,000s at the very bottom of this move. Just this move. I'm not talking about what happens in the next year or over the year. But just if we follow this fractal to its natural conclusion, that's the closest I can get to fitting the pattern that we saw on the weekly for 2021 and applying it to present day. But if you look at it more like just the price and you don't worry about the circumstances and the levels and things like that, so you're not making this is not as close in terms of the metrics and the moving averages as the first one I did, the smaller one. But let's just, for sake of argument, you don't believe that. You think we're going down macro, whatever you want. Remember, it's all imaginary anyway. Then we're going to go back down to around 16,000. If you're following the plan, if you've been following my analysis on the premium plan, you're prepared for all those outcomes. I'm not taking a position either way. The whole point is you don't need to take a position either way. And I think generally the point of this video is the technical analysis doesn't necessarily matter. These are the consequences. Just appreciate the circumstances. It's not just like a 5-minute fractal that somebody blew up, and we're not thinking about macro. We're not thinking about fundamentals. All the things I talk about in this Crypto is Easy newsletter, right? The actual human behaviors, actual patterns, precedents, historical standards, benchmarks, and other things that you would look for to get a sense of what the market conditions are and what you can look forward to. That's not the point of this video. The point is to just pull a fractal and look at, okay, let's say it played out that way. Here are the consequences. And the reason that's valid is because it's happened in the past in similar conditions, so why would you say it can't happen now? Just appreciate the circumstances, anticipate the consequences, realistic consequences. And maybe this market's not so hard. Maybe. So if you like that video, I don't really post on YouTube a lot. I don't really think I'm very good at it. I still can't get used to seeing myself on the screen, especially recording video, looking at myself. But I hope that if you're not subscribed to the Crypto is Easy newsletter, that you'll take a chance to do that. We don't do too much TA, but we do a little TA every now and then. We look at some things, but we look at the market from a lot of different angles. And if that's something that you want, sign up. Crypto is Easy. Google it or click the link below in the description. Relax and enjoy the ride.